What's going on, everybody? It is September 2nd, 2022, and this is going to be the episode 4, I believe, of the daily logs. I didn't get to record one yesterday. I've been busy kind of rearranging my office area with my desk and my monitors and stuff like that. Just kind of getting a new feel for September and going into the new trading month. So looking at S&P, we have finally reached down into the sell side liquidity, which if you look at all week, I mean, I basically called it to a T. I said we would end up right at 39.13. If you go back to my previous daily log, I called 39.13, and I said we reach down potentially into the high of the order block or potentially get down into the opening here. So it was really cool to see that. Today was NFP, which I advise to either A, if you're not experienced in these markets, you haven't been around too long, I would advise to basically stay out. Just observe price. You're not going to miss anything. It's very volatile. Even today, I was looking at it and I just don't want to participate. I mean, it's one day out of the out of the month that I don't really trade, so I'm not too upset by it. Looking at the 4-hour. Again, the low was annotated here, and I said we could get down into the order block high here, and then fill in the remaining of this fair value gap. So that was really cool. Price action was a little sloppy, but there's still some setups. I'll go over yesterday's price action because there was the YouTube model. But this is just a reclaimed fair value gap. You don't really want to see it go into it 3 times. So after this, the fair value gap is meaningless to me unless we break above it and then come back down into it. But besides that, to me, it's done its job. So looking at the 1-hour gives you a little more perspective to understand what happened here. So let me just change this real quick. Before the opening of price, I believe, 8:30. Yeah, we already we were pushing right up into it. So we have relative equal highs, which are a draw on liquidity, right? And this is all before the opening. And even if you look at 7:30, well, my time, this is NFP news release. So we expand higher, create relative equal highs here, right? So you shouldn't be expecting a sell-off because they're engineering liquidity above this. So you need to think and understand, okay, once price drives away, look on lower time frames for a possible entry. So to me, this wouldn't have been a viable move for me today, but I do see this as a potential long I would have taken because, and I'll get to the sell or the short, but this is a pretty decent long because I particularly like taking profits pretty early, and I believe this already ran 20 points. So for me, price expanded higher and it comes back down into below equilibrium, digs into a deep discount and expands higher. So you could have had to set up something along the lines of the mean threshold of that fair value gap. You could do the body if you want beneath the wick. You'd be targeting overall the buy side liquidity resting above here. But for me, as long as this reached about, yeah, by here, I mean, you're already up 20 points. I'd be taking some partials, moving to break even. And that's how you just protect yourself. I mean, you have to pay yourself. You don't always are going to achieve your targets. That's something over time you learn. And for me, it's more or less just being systematic, right? For me, I would much rather just take out at 20 points. That's usually what I aim for, 2R or 3R. Taking profits along the way. I'm moving my stops to break even after 10, 15 points, depending on where price is moving. If I think that, you know, it could have a small retracement, I'll leave my stop where it's at. And I'm always taking, you know, partials along the way. So even here, I would have been stopped out at break even, and I wouldn't have been upset by this. Okay. Some people, you know, they want to hold on to these targets and keep holding on, have an ego with it. It's like, you know, 20 points, on a 100K account, that's $2,000. That's more than what some people make at their jobs in an entire month. So you really have to have a perspective. Even if you're making $2, $20, $200, eventually that can turn into 2,000, 20,000, etc. So that's the perspective I have on it. Personally, I don't see the short here. And even going back the other way, I don't see any longs. So after we took out the buy side liquidity, we went ahead and just drove deeper into the sell side liquidity resting here. So we have relative equal lows resting. Even here, but there's nothing in here to align really with the fair value gap on the YouTube model. Even going down to a 2-minute or something like that, there's nothing in here, and that's okay. I'd much rather wait for a setup like this. And that's what my weekly goal is, 2R, 3R. Because again, that's somebody's entire month working a job, and you do that in less than 30 minutes, probably 45 minutes. So that's a perspective I keep in mind. Looking at yesterday's price action, which was the 1st of September. After we remember this low here that I pointed out, after we drove down into this, we're taking out sell side and doing what? Returning into a fair value gap. And it's also about the timing as well. Also bumping the high of that order block. So if we reel it back here, go down to a 5-minute. I believe this was the high of the order block. So remember that low, we took out that low, and also on a 5-minute, you're taking out the sell side that's resting here. You could have went short here. I didn't mention that. This is also the YouTube model, so you could have went short and you could have went long. Preferably, I would have rather went long. That's just my personality. So the YouTube model, right? We run into a opening gap, which is a PD array, running out buy stops, and then you have a displacement lower. Right here could be your shift in market structure. And then you have your fair value gap right here. Take the high to low here, make sure you are going above equilibrium, which yes, we are. Let me just change this real quick. And then we expand lower. Another one right here, right? We have another shift in market structure. So we have a fair value gap here, and we also have the low of the bearish order block. I believe if we go down to 2-minute or 1-minute, you can see here price took out buy stops right here and ran lower. It wasn't the cleanest price action. That's the reason why I said I really wouldn't want to go short. It was super sloppy on the way down, but on the buy side of the curve, so this is going off the context that we are taking out a daily time frame, previous day low. You're running into a daily fair value gap. You're reaching into a discount on the daily, and it's the day before NFP. So expect probably consolidation or just slow movements going into the PM session. So again, this is all based off of time. This is my time, remember, from here to here is lunch. So I'm not looking at anything here, okay? And I'm not just going long off of any random fair value gap, because some people would have seen the daily low taken out, which I believe was 39.13, right? So this is the daily low. Some people would have seen this. You have a raid beneath, a market structure shift, and then you're looking at these fair value gaps. But this is not a shift in market structure, at least to me. I'm waiting for at least this high or this high to be taken over, closed above. So if you look at this displacement, look at this high, okay, and even this high, depending on the displacement, would justify, which I think a lot of people get caught up on this model, even myself, trying to determine market structure shifts and the fair value gaps you should use. So once you see that displacement, next step you're looking for is the dealing range, right? If we go to a 5-minute, you can use the body to body here, and it just barely gets above that. So that to me doesn't necessarily justify, but again, the model can be adjusted to your liking and to your back testing. And I know it sounds weird, but if you're comfortable with that amount of risk, right? If you think it can run, right? So you could be looking at these fair value gaps. The lowest you would be wanting to see price go. Again, you're also paying attention to the down close candles, right? Because these down close candles are your order block on a higher time frame. Okay, so that's a reason why, at least to me, price did not go deeper into a discount, which I'll show this entry. Let me get to that next, but I just want to go on a 15-minute time frame or a 30-minute. Again, I honestly didn't even know that was there, but I just knew those down close candles, right, are order block. So that's on your 30-minute time frame, and I think that's just experience of looking at the charts that with narrative you can understand that. But you can still pop out to a 30-minute and just see that order block here, right? Price dips into that. So if you wanted to, coupled with the lower time frame, you could put your stop either A, beneath the discount low of that order block, or the very tail end of that. And then you're just targeting the buy stops resting here, and then a potential fair value gap to fill in, okay? Even if you go to 50% of that fair value gap, you're still getting a 1 to 2. I mean, you're risking 15 points to get 30 points. To me, that's a pretty fair risk to reward. But I really want to go over, I believe this is another example. Right, let me see if I can find another one. So for me, you're looking at this fair value gap and this fair value gap. So I'm sorry if there's a lot of annotations. So you could be expecting price to go into the second fair value gap, but anticipate the first one to be potentially your entry, right? So 50% of that fair value gap. Even, I mean, if you want to go right beneath this fair value gap, you're still risking 8 points to potentially run out the first target for me, which is the buy stops there, and then potentially, close in the remaining portion of that opening gap. And if you can get up to, let's say 20 points, that's where I'd stop. Which again, that's pure risk management or money management to me. I'm taking partials here, moving my stops to break even. Price to me shouldn't really break beneath even after we run out this high. Shouldn't even break beneath, I would say, this low to me. Once it starts to break beneath that, that's when I know I'm probably on the wrong side now, right? And then collapse the trade, at least you can take some partials here, and you're still protected. And I think that's going to be it for today. I'll probably update Sunday with a forecast for the week, but besides that, appreciate you guys. Like, comment, subscribe.